Welcome back to the Investor Professor Podcast. This is Dr. Ryan Peckham, and this is episode 141. Finally joined in studio. We got an in-studio recording. We got two people in the same place at once. We'll see how this goes. Joined today with Cameron. He's going to be speaking for the mind of the 26-year-old, the mid-20s. What is on their mind? We will find out. So let's talk about CPI this week. CPI number came in lower than expected, so there is a rate cut that is now being priced into the market expected. So we'll talk about how that can impact the market going forward. So get your mind right and let's get to work. Hey, 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 hey. You dropped this. Well, welcome back to the podcast, everybody. Today we are joined in studio. Cameron, how are you, my friend?
I'm doing good. Good to be here.
It's hard not to laugh. So we are actually recording this in our new office facility here. So we got two microphones, and we'll see how this goes, man.
I'm excited for it. I like what you did with the place. You running a pool company out of here?
Running a pool company for now. This might be one day have our own little studio here. We can record these on a weekly basis. So we'll see if we can pull that off. So this week, S&P 500 up 17% for the year. NASDAQ up 22, close to it. Dow up 5.5. So market's doing pretty well. We had CPI number come out yesterday that was lower than expected. And so the market obviously thinks that the Fed's going to cut rates in September, maybe pricing in 1 to almost 3 rate hikes by the end of the year, which, I don't know, seems a little, maybe getting a little bit ahead of ourselves. But you see like this massive rotation start yesterday, right? So you see where home builders start to rally. You see the Mag 7. So what are your thoughts on that? Do you think that the market will continue to rotate? You think it's a one-day correction? Today we saw the market kind of recover. So what are your thoughts?
I think expectations kind of get ahead of themselves a bit, right? So like, we'll forecast certain things, and I think people get excited. The market gets excited quite a bit. So like we saw that, like you said, with the home builders, right? They go up, tech comes down a bit. We're starting to see, okay, maybe there's an end to this in the near future type deal.
Yeah.
But if you think about it, they've always said higher for longer, right? So we have like this short-term focus, I think. We're very much like, taking information and making it real, which I think can be kind of dangerous, right? Because it's all against expectations, right?
Yeah, no, that's right. Yeah, that's exactly right. I think too, so you see this you saw this correction that happened yesterday. So the Mag 7 gets completely beat up. It's one of the worst days they've had in years. But you also have to think about how concentrated the market is in those names. So if people want to rotate into something else, the money has to come from somewhere, and it's going to be from those winners, right? So I thought it was interesting. We talked about this before we started recording, but like yesterday, the S&P 500 was down, but 400 of the 500 stocks in the S&P 500 were actually up. But the S&P 500 was still down just because of how much weighting goes into NVIDIA, Microsoft, and Apple.
I think, we talked about this before, but if you take the equal weighted S&P and you compare it against the S&P, the spread we haven't seen it since March, I think, of 2000 with tech bubble.
Not a good date, by the way. Not a good date to share. But yeah, there's so much money in those. But it actually was a positive sign today that they bounced back so quickly. So yesterday you see, so if we think about inflation being lower, if we think about interest rates dropping, what markets or segments do you think that would be good for?
Oh, well, we saw it with the home builders, right? Like interest rates come down, people my age, right? Thinking about buying a home here soon. So they're waiting for maybe what they think is the normal, which is low interest rates, lower payment, right? So they want to buy a home, first time home buyer, maybe newly married. So I think that's probably going to drive a lot of what we're going to see if rates come down.
True. So the real estate stocks, so you saw REITs yesterday, like real estate investment trusts started to rally. You see those things, but just those rate cuts alone, you saw the small caps start to rally. But really, like, I mean, it still has to show up on their earnings sheet. I mean, and we're still like, even if they cut in September, it's going to take a while. You know, you talked about the market being ahead of itself. It's going to take a while for that to work itself through the system.
Delay for sure. I think especially even with homes too, because think about the buying process, right? Well, like it's not like you're just going to buy a car same day you leave with it, right?
Yeah. Well, and also too, it's not just that, but how many people are sitting there waiting for rates to drop for them to go buy a car?
Yeah.
Like, or not a car, but go buy a house. Like, how many people are waiting for like, okay, I'm going to wait for the rate. Well, if everybody's waiting for a rate drop, well, then all of a sudden, if everybody goes out and tries to buy a house, then everybody will be basically probably getting a bidding war again. So think about your generation.
Yeah.
Cameron's 26, healthy 26, by the way. So Cameron's 26 years old. So what are like, when you think about like designing your financial future, like what are the main concerns for you? And you just bought a truck, by the way, so we'll get into that.
Yep, I made a big purchase. Yeah, so I think it's 26 is a weird stage of life because there's I have friends that are married, right? I have friends that are married and have kids,
right?
And then I have friends that are single, right? They're just trying to figure it out. So it depends on what stage of life you're in, right? Those goals will change. But I think no matter what, at my age, everyone's starting to think about, and I think it's probably because we're seeing headlines of homes and housing and everything. We're all asking the question of like, when am I going to get my first house? When am I going to have a place of my own? That's not an apartment, a 1-bedroom apartment somewhere in the city.
So what do you think most people's strategy is for getting into that like first house?
Probably just saving as much as they can, but it gets tough because if you think about people my age, right? Like where are they living? Austin, maybe, New York, San Fran.
Yeah.
These cities where rent is so high.
What do you think the average rent for somebody like, let's just take Texas.
Yeah.
So you're in Fort Worth. You have a lot of friends in Austin. Somebody renting, like what do you think the average rent is for somebody who's paying, I don't know, 1-bedroom apartment?
So it varies. I would say here in Fort Worth, you could probably expect $1,600, but I have friends in Austin that are paying $2,300, $2,400 for a 1-bedroom.
Jeez.
And
for a 1-bedroom?
For a 1-bedroom.
That's a house payment.
Yeah. See, that's what I'm getting at. You get stuck in this, paying $2,400 for rent, and we're just starting out our career trying to save money for a house.
Yeah.
Where's there room to save?
Well, plus too, like I've known you for a long time, and I know like you delayed buying a truck. Like you delayed, like a truck was a big purchase for you, but it's not like you like on a whim. It definitely wasn't on a whim. Like I mean, like you like you didn't just like show up one day and be like, I'm going to buy a truck today. Like you thought about it, you waited years, you saved, you hit other investment goals before you did it, and so I mean that's not the normal person. I mean that's not the normal probably person in their mid-20s. But it is. It's like, okay, do I start saving on my 401k? Do I go buy the new car? Do I save money for a house? Like you kind of have to pick which one you want to go after.
Yeah, and some of those. So I got stories. I got buddies who they get out of college, right?
Right.
They get the big job. They live in a place like Austin, big city. They get the nice apartment. They get the nice car, right? They haven't even started their job yet, but they know how much they're going to make. So on paper, it looks good, right? I'm going to get this paycheck. I'm going to cover my expenses. I'll be comfortable. 3 months later, they're in this job. They don't even like the job.
No,
but now they got this car payment,
of course,
and this rent, and they have no choice, but they got to stay. So I think when you wait for some of that stuff, it gives you optionality. I feel like that's gold at our age, right?
Yeah, I mean, it's gold at any age. Like optionality. I mean, like the whole point is like to give yourself options later on. So you can basically be in charge of your own future, right? It's like you can be financially independent. I saw that too. Like, by the way, that's nothing new for your generation. Like I saw people like buying brand new Infinity cars when they were coming out, like in the year 2000. Sounds so old. Like the year like 2004. But I was like, I tell all my students, and I told you this too when you were I'm like, just give yourself 6 months in the job before you start buying something big.
Yeah.
Because like you're in the honeymoon stage, like the recruiters are telling you this job is going to be great. Everybody's nice to you on day one, but like, do you like, because if you don't like it, but you, like you said, you have $2,300 a month, you have $700 a month car payment, you're in for three, and that doesn't even include student loans.
Yeah.
Like you give yourself like no wiggle room to like be able to find a job you actually like because you're so married to all the stuff you've already bought.
And so you bring up a good point, the student loans, right?
Yeah.
They were on pause for quite a bit.
Yeah, that's right.
And I graduated in 2020. So I graduated December of 2020. So that was, we were already into the COVID deal.
Yeah.
Companies were hiring like crazy. Right. But all the student loans were on pause. So people weren't really factoring that into the budget.
Yeah.
I don't think.
Right.
Can make it kind of tricky because when you live 2.5 years, not having to make that payment, whatever it is, how much you got. I don't know what the average is, but I think it's kind of high. And then that payment hits, your quality of life is going to take a little bit of a hit.
Yeah. I mean, yeah. And where does that, is that the money that they were using to go out, or maybe the money, I mean, it has to come from somewhere. So
you would hope.
All of that to be said, like when you have all those expenses and then you're trying to save up $40,000, $50,000 for a down payment on a house.
Yeah.
It's tough. And part of it is just, it's literally just when you're born. Because and again, I've said it on previous episodes, like I bought my first house with zero down, literally zero down 3 months before the financial crisis, like before like the mortgage crisis, like just $240,000 house, zero down, didn't put a penny down. And like, and how I just luck, it's just the luck of the draw basically.
Yeah, no, it is. I don't know if we're gonna ever see that. I'll say that, but
yeah. And so you talked about how you're like everybody your age maybe thinks that interest rates will be lower. Like I want to buy a house at like 2% interest, but do you think that'll ever happen again?
It's tough. I don't know. I mean, that's pretty low, and I think we were sitting there for quite a long time.
Yeah,
I think, but. A lot of if you think about it, right? Like a lot of people are used to that. Even people that aren't even my age, people that are a little older than me are used to that.
Yeah.
So you have a good portion of the population that is used to that and has that expectation.
Well, you have to think the generation right above you.
Yeah.
The generation right above you, basically between us, if they were buying houses between 2010 to just recently, they all had low interest rates. So you're like, when I was 9, I should have been buying real estate. I was, I mean, it's, and so that becomes kind of an issue as well. But I don't know. We'll see. I mean, if they lower interest rates once, I mean, it's not going to make that big of a difference.
No.
I mean, it's more of a, go for it.
So the pricing though, too. Think about the price of a home, right? Has gone up quite a bit.
Sure. Yeah.
And, depending on where your job is, you got to commute to a certain, say you have to commute into Dallas.
Right.
You got to find real estate in Dallas somewhere around there. Or you're going to have to be okay with a 30, 45 minute commute.
Right.
So there's that trade-off too. So
yeah,
I think a lot of people my age look to buy a home, but the question is how many of them actually will, or they will just, I'm not going to say stuck, because having an apartment is nice. You get what do they call it? Like the turnkey type deal where you can leave and you don't have to worry about anything.
Right.
That's why if you look in DFW area, right, there's so many apartments and they're building so many more.
Right.
How many people are just going to be apartment living
forever?
I don't know, ever, but for,
for a
much,
while.
much longer than maybe what the average used to be.
Yeah. Well, we even know people that are much older than both of us that rent, do an apartment just because of the convenience of like they have someplace somewhere else, or they want to travel a lot and they just, want to lock the door and forget about it, but that's kind of more of a specialized deal. So when we think about lowering interest rates, obviously that's going to impact smaller stocks, small cap stocks, right? They can borrow money. Maybe they'll be able to borrow money a little bit easier. The real estate example is, I don't know, you saw the REITs rally, but still like there's a big concern in 2025 about like who's going to actually renew their commercial leases. Are people needing as much space? I mean, you're probably more plugged into like, are people still working from home or are they not? Or like, are companies angry about what are people your age? Like, how's the work from home thing going?
I think it's a split crowd. I think a lot of people like the freedom of working from home, but the people that go in the office do enjoy it.
Okay.
Especially when it's a nice office. So I would say there's two different camps, right? Like you got people that maybe are going in an office that is hard to get to, maybe not that nice.
Yeah, the commute.
Or you got friends that work at Google, right? And have these awesome offices with all these amenities and such.
Yeah, you take a slide down from like floor 4 to 3.
Something crazy, right?
Get some gummy bears. Yeah.
Yeah,
okay.
exactly. Free coffee. That's what gets us, by the way. Just so you know.
Just free coffee.
Free coffee. That's what does it. And
so
snacks.
the pizza parties are off, right? Everybody hates. Nope. Everybody makes fun of companies for the pizza parties, but the
coffee's where it's at.
We're good.
Or there's been some offices that have the kombucha on tap. That always gets me.
Ridiculous. That is just absolutely insane. Yeah. But what about but are companies still offering those jobs? Or are they putting pressure on your people to come back into the office?
Pressure for sure. Yeah. When you look at job postings, I have friends that are in the job market looking for jobs. Not many are remote anymore. Okay. They're mostly hybrid. So you're either in 2 or 3 days a week.
I think hybrid is pretty good though.
I agree.
I think that's a great meet in the middle. I remember when I was your age, basically commuting, and I literally I remember thinking I was making $50,000, $55,000 a year, and I'm sitting in traffic both ways, and I'm going, this is not. There's got to be there's easier ways to make this money. Doing it 5 days a week, but I think back, I try to think about if I only had to do it 2 days a week or 3 days a week. Mm-hmm. I think I probably would have been okay with it, but that actually worries me because I don't know if I would have had the hunger to start my own business. Yeah. Because the inconvenience would have been I would have been okay dealing with it, and it wouldn't have pushed me so much to be man, I cannot do that. I cannot stare at random people on the highway 5 days a week.
Yeah, then you it's funny because I have a friend who chooses the days to go in the office when nobody else does, specifically for that reason. To avoid the commute congestion, right? Mm-hmm. And to avoid all that. So there's that nice perk. Some companies will give you optionality of what days you want to come in.
Yeah. Well, it's interesting. Dell says if you work from home, you won't get a promotion. And what's funny about that is they've had people go, okay,
they're fine.
Okay, we're good with that. I'm good with that. I'm happy.
So, but I'm so curious what this is going to look like long term.
Right.
Because think about going back to my point of view, younger generation. Those early years, that's when you maybe have a mentor in the office or somebody to kind of show you the ropes. Trying to do that over Teams or Zoom or whatever you're using. Yeah. It's different. You don't rub elbows like you would in person. So, that being said, I think it could limit you. We don't know though. That's the thing, right? So we'll find out a few years from now whether or not somebody that started and worked in an office the whole time, where their career is at, right? Versus somebody that said, "Hey, I'm okay. I'm at Dell. I'm going to work remote."
And it really comes down to the person too, because I think for a lot of people, especially if you're young, maybe you're a young female and you want to, be able to stay home. You want to be able to have a career, stay at home, raise your kids. Mm-hmm. The flexibility for a family, to be able to have one partner who's going into the office, somebody who has a little bit more flexible schedule. That's worth, a good amount of money for somebody. It really, really is. And for companies, it's okay, this person isn't coming to the office, but let's say they've been here so many years, they know the system, we know they're dependable. I think it just depends on what somebody's, what is their intentions? What's their, what are their career aspirations, and are they being met or not?
So usually, from what I've seen, more senior of the role usually has optionality to stay remote. They can be remote. The younger, maybe a year, 2 years, 3 years out of school, right? They're going to be having to stick to the hybrid. But say that if you're in sales, right, the field account executive or somebody that's a little older, right? Someone like that, or even just a senior account executive, they have optionality to stay at home, right?
Well, yeah.
But what does that see on the flip side of that, right? So that's super nice. But the younger people, if we're still looking for mentorship and some direction, right? And nobody's coming in the office. It's this weird cycle, right? They want the young people to come in, but the young people are coming in, they're all staring at each other
Where are the old people?
Who do we learn from, right?
Yeah.
And because the older people are staying at home. From what you're saying, it totally makes sense. You got kids, right? Yeah. You want to spend time with your kids. You don't want to sit in the car for 40 minutes.
Right. Yeah. It does. It makes it hard. If somebody younger, it would be hard to find a mentor. And it's funny too. Some companies try to, they just pair you up big brother, big or little, big brother, big sisters or whatever. But it doesn't really. It has to be I don't know. It can't really be manufactured. It's kind of a tough deal.
Mm-hmm.
I don't know. It'd be interesting to see. Like, it's weird. Like your class, like when you graduated, everybody was getting hired for remote.
Oh,
and that,
yeah.
that doesn't happen anymore.
Nope.
Like it does not happen. Like when they come in and interview people, students I have in class now. I mean, it's some will be like it's 24. It's 5 days a week in the office, maybe hybrid. And it's funny because some students they'll only interview for in-office jobs, and some students will only interview for hybrid jobs.
Yeah.
Like,
That's what I'm saying. So I think long term, you'll probably see the results of that depending on or you won't. There won't be any results. Who knows?
But what a great time to be alive if you're an introvert.
You can hide out.
You can hide out.
Yeah.
And like, I just want
I'm out.
I don't want to talk to anybody. I just want to show up, do my job, And obviously we're talking about certain career paths where like this is an option. Not every company or not every job is this an option.
Mm-hmm.
So you recently purchased a vehicle.
Yep.
And we talked a lot about this when you were buying it.
Mm-hmm.
And I was like, I don't think you're going to like this process very much. So, and I shouldn't feed you that, but what were your thought process on buying a vehicle as an adult for the first time? So
it was an experience for sure. I think there was definitely, and this is what,
I want to, so think about this. What were your expectations of what you thought it would be like when you did it? And then what was it actually like? Let's do that.
So what I thought it was going to be like was, very direct. I know what I'm getting, and there's no hidden numbers, none of that. And it'd be a pleasant experience, right? I'm buying a new car, make it pleasant, right? Have a good sales experience.
Yes. And you're in sales, by the way. So
I am in sales.
So you have a higher expectations of what sales should be.
Yeah.
So I'm just going to put that out there.
Makes it probably more difficult for the car salesperson. So that was the expectation. Going into it probably wasn't the case. It really wasn't the case.
Right.
Because you have so many options, right? You go to all these different dealers and they're all selling the same product, which is the truck. The difference is going to be the service, right?
Right.
And they're all telling you different things and they're all bidding against each other.
Correct.
And so you're playing this game of ring around the rosy, going to different dealerships, and they're trying to sell you the same truck, but they're telling you why the other dealership is not the one to go with because of X, Y, and Z, right?
Right.
And they'll feed you numbers, and there's different things, and it just felt like there was so much gray, right? And my job was to figure out what the gray was. Like, what's this $4,700 package we're adding here? What is that? Oh, that's nitrogen in the tires. And I was like, why do we put nitrogen in the tires? Yes. I don't know, but we do it. Yes. And it's like, okay, not a great sales tactic.
Yeah, I remember that. I remember that phone call. Yeah, this one comes with this one comes with uranium in the tires, and that's what this charges for.
Yeah.
But I think that was the thing, like, and you kind of touched on it, but you talk about the finances. So they always show you like a number to get you in the door, right? This is what the number is. But cars, they're either going to make money on the price they sell it to you at, or the interest rate you get, or the number of payments you have to make. I mean, like, it doesn't, like, there's always a catch somewhere. You're just trying to find it.
And here's the funny part. Like, there'd be times where I'll get thrown a number or whatever, and I just point blank ask him, like, hey, how y'all making money? Just tell me how you're making money. Right. You got to, it's a business. You got to make money. I expect that. We're going to, obviously that's got to be part of the deal. But it's whether it's hidden, and it's funny too, because like you try to figure out a good deal for both parties, and I felt like there was a few times where I was like, okay, so you're not going to be worried about the interest rate. I'm like, well, don't give me a 14%. What are you going to throw at me? And it's like, well, what did you expect? And it's like, what do you mean 14%? I got good credit. Like, I'm not some Joe Schmo, right?
Yeah, I mean, you do have good credit. Obviously, you have a bachelor's degree in finance. I mean, you are well versed in this subject. So I always think about, like, you're well versed in this subject. How is it for somebody normal who has no education in this area? And how many people are signing up for these deals left and right?
Yeah. So one thing that was very clear from the get-go is when we talked, so they always want you to drive the car.
Right.
They want you to fall in love with it. Then they'll ask you, what do you want your payment to be?
Of course.
And it was so difficult to change that tone to like, hey, the payment's not really what I'm after. And I had to say, like, hey, it's all about value. What am I paying in total for this car and what am I getting for it?
Correct.
Right. But they were so focused on what do you want the payment to be, because there's so much they can do, the wiggle room,
they
right?
can manipulate it so much.
So imagine if somebody comes in, they're like, hey, I have $500. They'll make $500 work some way, somehow.
Yeah, they'll finance it for 96 months. And they'll do all those things, and that's the whole point. But like just like we said in the beginning, you're talking about somebody's got a $2,000 a month rent payment. Mm-hmm. They have so much, like they know that they're going to make whatever the number is, $3,500 a month.
Yeah,
and they just try to make all the payments hit underneath that number, whatever it is. And so when you go in there, and that's when you and I kept talking, and I was like, look, even if they give you a worse interest rate, if they make your, like, you can control the number of payments you make. If you want to overpay every single month, you can. Mm-hmm. So try to get the best price for the vehicle. And then later on, they're going to think that they're going to make this much money in interest. But if you actually pay more every single month, then they won't make the interest they thought they were going to make. Because it's really the only thing you have control over.
That was wise. Yeah, 100%. I totally agree with you.
Yeah, I mean, like at least, okay, I know I'm going to get a lower MSRP or whatever it is. And then I can later on control how much I pay every month. And I can take throw an extra $200 a month or whatever it is and just try to control my own destiny. And if I want to float down the road with nitrogen tires, then I guess that's my choice.
Exactly. But then you got to hold yourself to it, right? So that's the other part of this. There's a definite emotional side with buying something like this.
Right.
Especially like depending on, I think you talk about like your money story, like how you look at money comes into factor here, right? So it's like if you made that deal with yourself, okay, hey, I'm cool with 8% interest rate, right? And because I'm going to be paying more, make more payments, bigger payments, such, I can control that. You got to make sure you hold yourself to that, right?
Right. Yeah.
So you don't just get used to the minimum or whatever the payment is. You got to, if that's your plan, you got to stick to it.
Yeah. And that's so hard. Like a lot of people just don't have the discipline to do that. So, and then what happened like a month after you bought the truck?
Oh, you're going to bring that up, huh? So somebody hit me.
Yeah.
I cried.
So Cameron gets hit. And his car was actually parked when somebody rear-ended him.
Yep. Gosh, I don't even think it was a month. I think it was like almost 3 weeks.
I think in 3 weeks. Okay.
Yeah, so 3 weeks. Yeah.
Yeah.
Tough. But
it's so brutal.
Then it makes you start wondering. It's like I just put all this money theoretically, right? Because I don't own it. I'm paying on it.
Right.
But I put all this money into it, and look, somebody hit me, and it ruins my day.
Yeah, I think it ruined a couple days. Yeah,
maybe. Yeah.
Well, yeah, because it's only that. It's not only like the inconvenience of getting hit. I mean, you're getting a world-class education here, because it's not just about getting hit. It's about dealing with insurance companies now, proving that you weren't at fault, because your truck was actually parked when you got hit.
Yep.
But you had to talk to a lady who was a witness. Then you had to do the interviews with the insurance company. So all of those things, like you didn't, most people probably don't realize, like you have to interview with the insurance company. They ask you the same question 1,000 times, because it's not really an interview. It's an interrogation. Mm-hmm. To try to figure out who's at fault. Mm-hmm. So did that give you, a good sense, or how was that?
I've never done this process before, right? So I was new to it. Yeah. So I called my insurance. That was the first thing I did, because I was like, okay, I pay the premium. I'm a good customer. Mm-hmm. I make my payments, right?
Right.
And I thought it was, hey, they'll take care. That's what I paid them for. They're going to figure out my truck's going to get fixed. It's not my fault, that kind of deal. And they were like, no, you got to call his insurance. You're not at fault. He is. And I was like, then what do I pay you for?
Right.
Now I had to go through that rigmarole to figure out, the claim number that he has and all that other deal. And it took forever. And I was lucky. I got really lucky because there was a nice older lady that saw the whole thing.
Yeah, the witness, yeah.
And yeah, because when it happened, you got to think, I'm 26 years old.
Right.
I've had the truck for less than a month.
Right.
I've never had a truck on my driving record. Right. And I get in an accident.
Yeah.
On paper, I know this does not look good. Yeah. It's like, oh, well, and the gentleman that hit me was older. Right. So I was like, on paper, it doesn't look good. I luckily had this nicer older lady who saw the whole thing.
Yeah.
So as soon as that whole deal went, it finished, I went over to her and I said, hey, do you mind if I get your information? That kind of deal.
Yeah.
I think that sped it up a bit. Without that, I'm really curious what would have happened.
Yeah.
But yeah, it was definitely a lot of back and forth. It takes a lot of time.
Well, and how long ago was that?
That was a month ago, I think, right?
Yeah. So
a month.
It was a month ago. So we're talking, this is pretty current. So, and you still haven't got the truck in the shop because now it's not only dealing with the insurance people. Now it's like, I got to get my truck in the shop. I mean, like you got to get a rental car. And it's like, oh my gosh, man. It just, so that's the way it works, man. You buy these things and then we talked about, I have my house, I got a water leak I'm waiting on. I mean, this is the one thing that I think is important for people. When you buy a house, you buy a building, you buy a truck, you buy whatever, like there are going to be things that break. There are going to be things that you have to deal with. I mean, there's an inconvenience factor sometimes of owning things. Mm-hmm. So we talk about them being assets. But when I think about assets, I think about things that put money into your pocket. And so you got to be real careful with that. That's why, like, a lot of times when we talk about stocks so much on this podcast, I'm like, look, I own Apple. They don't call me. They're not telling me that the water heater busted. I mean, like, you got to think about sometimes, like, what is the convenience of it just being easy? Like, what is that worth to you?
Yep. Totally agree.
I mean, so, and you hear, like, we have people call us, I want to start this business, I want to do this. And it's like, gosh, man, that just seems really hard. And like, there's a lot of things that could go wrong with that. Why wouldn't you just start investing?
So interacting with you has taught me that you can't put a price on simplicity. Right. Just making things super simple and you don't have to worry about it. That's worth something.
Well, like we work with so many clients and you start seeing how other people invest. You see the things that they do. And sometimes you're like, gosh, man, it just like you have that. And that's why at the end of the podcast, I always say, don't mistake activity for achievement. And it's really like people think I'm saying it to them. I'm actually just saying it to myself just to remind myself over and over again. Mm-hmm. Because sometimes like I think that we feel like we have to have a lot of activity, but not all activity is good activity. And so you just have to kind of think about that before you do. Because sometimes people buy themselves a job or a headache or whatever you want to say. Like not everything is going to work out the way you think that it's going to be. And sometimes you trap yourself. Mm-hmm. So, I don't know. I think that's great. Well, and what we forgot to mention is that you contribute a lot to your 401k.
Yes.
You contribute a lot to buying the stock of the company that you work for. Like, so you paid off your student loans. So the first thing you did after college, you had invested some money, you paid off your student loans, you've contributed to, again, the 401k, the buying the stock options. So you kind of got a really solid foundation under you, and then you bought a truck.
Exactly.
You're like, I can't take it with this Ferrari anymore. I'm going to trade it in. I'm going to buy myself a truck.
That's the Ferrari. Exactly. Yeah. I think we started off the podcast talking about all the tough stuff as a 26-year-old having to deal with high prices of rent and such. But I'm not the only one. Like it's doable, right? It's doable to figure it out. You just got to be patient and you got to have some discipline with it, which obviously you've taught me a lot. But yeah, no, that was the big thing for me because, going back to Money Mind, like I like security.
Right.
I like a good, solid foundation. So that's what I wanted.
Yeah.
So when I graduated, it was paying off the student loans, get rid of the debt, right? Being debt free. And then it was contributing to the 401k to the max of where my company will then match, right?
Right.
And then it was the employee stock purchase plan, take advantage of that. And after, doing that for so long.
And your personal portfolio.
And the personal portfolio, yeah. So I would say I'd probably maybe a little bit too much on the side of cautionary, but that's just who I am, right? And I lean into that.
Yeah, and we talked, and he didn't have a Ferrari, by the way. It was a Mazda that he drove in college that he continued to drive. But the thing is like when you create your financial world that matches your personality, it is consistent and sustainable.
Yep.
Because I think the hard part when you're young is you see like everybody thinks that like when I get done with college, it's like the end, but it's literally like the gun goes off for life and the race really starts.
Yep. Yeah.
And so then you have the trouble of whether you, will admit it or not, you continually self-judge yourself based on what everybody is doing. And your generation has a really hard time because like I didn't have social media. I didn't know how broke I was. Your generation can see how broke they are because they can look on, based on everybody's highlight reel. But you start comparing yourself to how everybody else is doing. And so it makes it really hard to like delay gratification and like put in the work in the beginning so that you can basically leapfrog people later on.
So I thought I was pretty disciplined, but that by far was one of the toughest deals, right? Because like
what piece?
Just being disciplined, right? Like sticking to a budget, consistency, right? Because you're young. I'm young, right? So I have friends. We're all in the same age group. We all graduated. Some people are taking trips, group trips. They're inviting you, and you're like, oh, that's kind of expensive, and it doesn't fit your budget. But there's part of you that's like the social aspect, right? Where they're trying to get you to come along with, and that's where you kind of got to figure out what's right for you, because not one is going to be right for everybody, right?
Yeah.
Some people, taking that trip is really going to do them a lot of good, right? If they make it work, if they can make it work, that's the key.
But your generation too, man, y'all, nobody ever gets married where they're from. Like you're like there's so many weddings, like other places, like you have to fly
destination weddings.
Not even just destination weddings, fly to Nashville, Charleston, wherever, like come to my wedding. Like there's a lot of expense in that. Like, and you don't want to feel like a bad, you
gotta go.
I didn't have that to deal with, but like, you don't want to feel like a bad friend, and be like, oh, I'm sorry, I'm not going to go. So everybody goes to, but that takes that takes some money to be able to do that too.
You just gotta, I think, like I've been in a few weddings, right? Tuxedos are expensive. Yeah. So especially when it's a special one, you got to buy it, right? So you just got to make it part of the budget. That's the only thing, right? And you got to have that. You got to look forward enough to try to figure that out, right? Okay, if it's going to be X, I'm going to start budgeting for that now, a few months in advance. But kind of circling back to that same topic of discipline. So there's discipline when we're, I think, comparing ourselves to other people that we graduated with.
Right.
But I think there's also this point too where we grew up with parents that had a lot going for them, right? Potentially, like they had the house, which is probably what makes us want to own a home, right?
Yeah.
And all this, parents who were in their 40s, right? They took 20 years to build this life and earn all this money and whatever and get a good foundation. I think it's tough because we're also comparing ourselves to the life we had before we went to college.
Of course. No, I tell students that all the time. You spend your 20s trying to get back to the lifestyle you had with your parents.
So that's why they buy the BMW because that's what their dad drove or their mom drove or whatever. Well, but they had 20 years. They had 20 years ahead.
Yeah, I talk about like by the time you're aware of what your parents actually do and how they, how well they're doing or, whatever, they're 20 years ahead of you, normally at least.
Yeah.
Somewhere
around there.
Somewhere around there. So you miss or you're a baby all the years that they're grinding.
Exactly.
They just don't, it's not their fault or whatever, but they get a real good education of it when they're your age.
Mm-hmm. Yeah.
Like, oh, okay. How much did that cost? Oh, okay. Next. And how much are those plane tickets? That kind of thing.
You get your first job and you're like, I don't even know how I'm going to make it on this, whatever it is, depending on whatever job it is. But
the good thing is like, you're setting yourself up. You're making decisions that the 40-year-old version of you will be happy with. And so we'll see where it is. So are you looking on, we'll go back to the market. I feel like we're going to do this multiple times. So we'll come back to, days of our lives of a 20 something.
Mm-hmm.
Anything you're looking at market wise in the next week or so? We got company earnings, anything you want to see, anything you're worried about, any concerns? What do you got?
So
as we close this up.
Yeah. We have banks, right? Bank earnings. Yeah.
Today they came out, some of them.
So looking at that, I think is what I'm going to be focused on. Because I think a lot of the banks got beaten up quite a bit depending on who they were, right?
Yeah. Some of them did. I think most of them recovered throughout the day because the market ended up having a good day. But, they on their conference calls, they talked about how, like they can see where consumers are starting to make choices, like real choices as far as what they're spending money on, which again kind of gives the Fed more, more ammunition, if you will, to lower rates.
Mm-hmm.
So,
and also too, like you think about it, like big banks like Goldman Sachs, right? M&A activity, right? Mm-hmm. So we haven't had a whole lot of M&A, really at all.
Right.
At some point, we can probably expect for that to come back.
And we'll just talk about that maybe the next time we record this. We'll talk about how. I haven't talked about it much on this, but the political landscape and Joe Biden's like the first debate and all the market's already pricing in a Trump victory. But that should increase M&A activity. So maybe we'll spend some time talking about that. So, all right, let's end it here. We're good. This is our first. Well, hopefully you enjoyed this first in-person session doing this live, and we'll see how it goes. So, all right, never mistake activity for achievement, and we will see you next time. Thanks, everybody.